With that, we can welcome in Thomas Savidge, Research Fellow at the American Institute for Economic Research, and Jake Clopton's here, President of Clopton Capital. Welcome to you both. All right, Thomas. So we've seen a number of these trading partners come forward, make a deal, last-minute deals achieved also, and then those who just didn't get it on their schedules in time. What do you make of the deadline?
Well, as Mr. Myron mentioned earlier, there is some paperwork and there's a little bit of delay, but seeing these deals finally come through, which while I'm not crazy about tariffs, I love certainty. That certainty, too, is going to get reflected in the markets. At least with that certainty, people are going to be able to plan around those tariffs. They're going to move away from that wait-and-see position that we've seen over the past couple of months, and they're going to make adjustments accordingly.
Also, one of the big news here, Jake, is Mexico and Canada. Today's the deadline, but President Trump announced a 90-day negotiating period with Mexico, specifically after a call with their President Sheinbaum. This means that 25% tariff rate will stay in place. On the contrary, a tariff on the northern neighbors, Canada, was hiked up to 35% from 25%. And this had to do with fentanyl and cracking down the lack thereof and other illicit drugs, per the White House. Your thoughts, Jake?
Yeah, I mean, the tariff hikes are how we get these trading partners to the table. I mean, if they're not willing to come to the table and start negotiating, they're going to see hikes. And so like we're seeing with Mexico, right? He's giving them, time to get a trade deal going. So if these countries don't come to the table and start negotiating, they're going to see hikes. But like we're seeing with China and Mexico, right? I mean, they're getting reprieve. They're getting time to make a deal. So, I don't think this should be a surprise to anybody. President Trump has really telegraphed that if trading partners don't come to the table, they're going to see hikes. So I really think this is, the right move.
Hard to ignore the markets right now, down about 500 points actually on the Dow. So Thomas, is this going to be a rough day of trading for folks?
Right now, it looks like it could be. So I would say don't check your retirement accounts today. Maybe check it next week.
Yeah, down 500 points right now. Obviously, not only do you have the tariff negotiations happening, some of that pushed off. Obviously, the weak job reports coming in as well. Clearly, the markets do not like uncertainty, but important to point out as well that the market's still there at record highs. But again, the Dow down about 500 points. Speaking of that, Thomas, I'll stay with you on that. The jobs report payroll grew by 73,000 in July. The estimates were around between 100 and 110,000. There were some revisions. We spoke with the chairman of the Council of Economic Advisors, as you know, Chairman Steve Myron, about this, and he discussed it. And he essentially said it was about foreign workers. Now, you're going to see the lack of foreign workers or those here that may have been here illegally not showing up here in the reports, alluding to that. Talk to us about this, Thomas, and maybe this trend we might see within job reports moving forward.
Well, sure. As Mr. Myron mentioned, that the past 2 months, those downward revisions are from seasonal adjustments, which unfortunate, but were to be expected. You think about all the summer jobs, tourism, things like that, those jobs getting added. But when you are adjusting for the seasonal changes like that, there is that downward revision. I think Mr. Myron is correct that some of that is captured in many of the foreign workers going down. But one thing that's really concerning when you look under the hood at this jobs report is that it seems about 75% of those jobs are in healthcare. And so healthcare, while of course it's somewhat of a private industry, it is heavily subsidized and regulated by government. And so what we're hoping to see is more, at least in the near future, more job growth in more of the private sector areas that where government doesn't have as much of a heavy hand involved. And that's really what's sticking out to me right now is that, even aside from the difference in foreign workers, is looking at what industries are growing. And really, it seemed like healthcare saw a lot of that, which, of course, is, a lot of that is driven by government spending.
All right. Interesting. Thanks for weighing in, both of you, Thomas Savidge and Jake Clopton. We appreciate your time today.
Thanks so much.